Traders, this lesson, resistance becomes support, support becomes resistance, fractals, and FX flows. This lesson is very, very important. So many traders will ask me, show me your latest neural network. Show me your latest algorithm. Show me your latest holy grail or fancy indicator. Show me a way that I can make profits on a consistent basis. And traders, it's important that you understand this section right here in order to provide yourself the foundation for anything else that you will learn in this business. And it's about resistance becoming support, support becoming resistance, fractals, and FX flows. I may show a slide like this, and so many people will say, well, I understand that. I understand the basics of that. And however, they won't actually apply it. And just please be with me here as I walk through this. And it is so important. We see here that this is just an example where price will move up on a price swing, and then price will move through and above the high that's achieved, and at a later date it will act as a specific price level that provides support to the market, potentially before its next leg up past the previous high, and again the previous high will offer support to the market. And we see here that support can offer again support at a future date, and we see price will consolidate between levels of support, and it will consolidate between levels of support and resistance. And then as support is broken, the market will use that previous price point supporting the market as resistance at a later date, and so forth. Support breaks through previous support, which at a later date offers resistance. What's important to point out here is that the market spends 60 to 80% of its time in ranges between levels of support and resistance. And that is critical information for your trading, and understanding that and understanding how these ranges and the flows work within these ranges. Having a closer look now, price will swing up, offer a level of resistance as we studied in our previous section, retrace down to a low, and it is the market's next objective to move to and above the previous level of resistance, and for price to trade and hold above the previous level of resistance and make new highs and extend to new levels. Then once price has achieved a new high, it is your first order of business to look back at the previous level of resistance that was achieved, because that is an important reference point for the traders at the major institutions, because as they accumulate positions and as they build up their positions and move flows above the previous high, they will want that previous level of resistance or that high to hold, because it now puts them in a position to manage their positions in a profitable level, or their books will now be profitable based on the positions that they've accumulated before exceeding that point. And anything that moves above that, of course, will increase their profits. Therefore, when we get a retracement back down to the previous level of resistance or the primary reference point of the larger institutions or interbank traders, they will do what they can to support that previous level of resistance or that specific price points. They will do what they can. So as flows retrace, we typically have a weakening in buying, and it may not be selling pressure, but simply a slowing in the buying. Then as price comes down to the previous level of resistance, then you will see flows coming into the market to again support this level, and begin to initiate a new leg up in an attempt to move beyond the previous high. Again, we see here the market will move price to a high, then we'll see a decline in buying interest, during the retracement phase, and then it's the order of business for them to move. For the bulls, want to then move and penetrate through the level of resistance, and that level of resistance will offer support on the accumulated flows that are now sitting in a profitable position. And often you'll see profit taking on that leg up, which is not only a decline in buying interest, but also a modest increase in selling, which will push price down. Then an additional accumulation of positions in an attempt to move price upwards. Just looking at it in the opposite direction now, we will see there will be selling pressure on the market, and then a retracement, a decline in the selling pressure, maybe a bit of buying, and then once again an increase in selling in an attempt to move below the level of support, and then that level of support at a future date will provide some resistance to the market and as a primary price interest point to continue to move price downwards. Let's have a look at it on a chart now. This is a 15-minute chart, and the reason I use a 15-minute chart in this example is because it just gives us a bit of a closer look at the actual flows that were moving at the time. So for example, we see here that price has moved in this consolidation. So the price interest point of the market at this time is between this low and this high, and that is, if you think about an institutional trader having a book and a book of business and order flows that need to be fulfilled within that day, and the institutions are trading among one another, and they're trading between these two specific price points. Over here we see our price is 120.40, and the high here is 120.60, so it looks like the ranges are between 120.40 and 120.55. So those are their primary reference points that they're dealing with at the time, 120.40 to 55. So price might move from 40.43 to 41.44, 42, 47, and moving up and down, and as the primary price points before a stimulus comes into the market or before a significant amount of flows come into the market that are going to push price, for whatever reason, push price beyond this dealing range. And as we see each of these candlesticks represents 15 minutes in time, and look at all of the time that it accumulated before one candle moves price below the price reference point of 120.40, and now we're dealing between 120.20 and 120.35, 120.20 and 35, and tens and hundreds of millions of dollars are moving between this price as a primary reference point, and we see there's an attempt to move lower, and it's briefly rejected as price comes back up. And as we're dealing within the same day, the price reference point on this 15-minute chart simply refers back to that price dealing that occurred between 120.40 and 120.60, but 120.40 is the base, and as flows committed lower to 120.40, that's going to be the primary reference point of the new flows for us CTAs and for the bank traders and the interbank brokerage firms, on exchange bank brokerage firms. Now we can see here that price came up and tested 120, 42, 43, and tested it again before making a decision to start to move lower and test the low base. This simply here is simply one institution dealing with another, and just the natural price movement that can occur between the two, as price needs a stimulus to come into the market in order to move it to new levels, or one entity or several entities that start to commit to flows moving in one direction. And as we see, price has consolidated for some period of time before making a move to commit below this level here, which is approximately 120.10. So 120.10 is our base, and look how rapidly price moves below 120.10 down to 119.80, 30 pips. And when you see a nice steady flow down like this, you'll of course naturally see and commonly see a retracement as the selling pressure eases up. You may see a little bit of buying flows come into the market, or the dealing that occurred during this leg down. You may see some accumulation and profit taking just on that short move from one of the entities that has contributed large flows into the market. So price comes up right back to the previous reference point, which is approximately 120.10, 120.08 and 10, and we see how it goes right up to that level before meeting resistance. And this price move down below is the reference point that now becomes resistance. And any institution who has accumulated positions in this range and has committed below, then they have a profit accumulation or a net gain on those moves, and therefore it'll be in their interest to protect or to maintain or hold this position. But they also know that the bulk of the institutions are looking at this price point as their primary reference point. Therefore, there will also be an ease in buying pressure, because they know that this is a sensitive area. It will become a very sensitive area to the market, and they will anticipate a potential bounce because so many eyes are on this level. And we see again price consolidate between 1980 and 120.10, a 30 pip range. We see a brief attempt to move below 119.80. It retraces back up to 120, more or less staying in a consolidation before further attempts to move below, weak attempts, as we move later into the session towards 0 hours, 0-100 hours. Then Asia, low liquidity during this period, and Asia pushes price below 119, looks like 119.75 area to 119.80. Asia pushes price below. It achieves a primary reference point low for the day at 119.50. Retraces somewhat, but look where it retraces to. Its primary reference point of 1975, and consolidates at 119.75 as flows are unwilling to move above that primary reference point. Now as liquidity picks up, you see here how we're moving into the open of Central European time, Frankfurt trading. We see a move down to commit price below the previous low of 119.50, 50.55, and we spend 15, 30, 45, 1 hour, an hour 15, an hour 30, and an hour 45 minutes making attempts to move below the previous day's established lows. It is unwilling to commit below, and when we get that, then often we see a significant withdrawal of selling pressure. So there becomes a withdrawal of selling pressure, or maybe a stimulus comes into the market, or maybe in that day European traders decide to price in the expectation on an economic report or news that's coming out later in the day, and therefore they ease off on the selling pressure, and there may be an increase in buying pressure to push it forward. But look what happens once price moves above our reference points in 1975. Then price consolidates to 119.85 approximately. A short period of time it moves above. We consolidate between 85 and 95 or 120. Consolidates. Price moves above. Consolidates between 120 and 2020. And again consolidates using the previous resistance as support at a future date. It moves above 120.20 using previous resistance as support and dealing in these ranges. You can see how price moves and how the primary flows, the significant contributors to the market, are dealing within the ranges and as their price reference points. Therefore, these movements are going to help you with your entry opportunities, because if you see price and say you anticipate that price is going to move up or continue to move up, then what you want to do is you want to trade at the base of these ranges. So therefore you want to look for an entry at the base of the range before its next leg up. You do not want to chase the market, and we're going to cover this in detail on your order entry section. The other point that I want to note here is this, is look at how long consolidation is and look how short a period of time it takes for it to break through the base of consolidation. Then we have another consolidation in this range here, and look how short a period of time it takes to break through consolidation. Again, another range of consolidation between support and resistance, and then price breaks through. Look at the length of time between support and resistance, price breaks through. Look at the length of time between support and resistance and price breaks through. Look at the length of time between support and resistance and price breaks through. What this should tell you is this: the market or price action will deal within ranges of consolidation with a very short period of time of trending. And what you should surmise from this information is that when you're holding positions, you can anticipate price to move up and down within a given range before continuing in your direction. And we are going to look in more detail as to how that's going to come in handy in managing your positions, finding your entry orders, and looking for new and ideal and high probability entries when we get into more detail on the additional techniques that we're going to look at in this course. So regardless of how it is that you trade, no matter what holy grails that you hold in your hand, no matter what sophisticated tools you have or how many indicators you have on your chart or what your understanding is of the market, please understand this and understand this well and look for it every day. And when you manage your trades, you should be watching this and watching for this type of price behavior. It is absolutely critical. These lines are simply drawn in here to show various highs and lows of the ranges. Now we're going to look at this and what it appears like on various time frames. So first we're looking at a daily chart. If we look at a daily chart, look at the ranges here and look at the big move. And we've just drawn very generalized levels of resistance that become support, very generalized resistance that becomes support, and again generalized resistance that becomes support. Here again we see price makes a big move and then goes into a large consolidation of a couple hundred pips. We see support here. We see price move into this range. At a later date it becomes a significant level of support before committing upwards. We see this range of resistance and support here, and price comes down using the previous level of resistance as support, and then as price breaks through, this level here will become resistance, and again as this has established itself as a key price point through time, it becomes a level of resistance. and so forth into the future. Okay? As we see resistance and support, you see the ranges of resistance and support here, and ranges, the market bound by ranges here again. Let's have another look at this daily chart. Here we see a significant trend. Well, look what happens during the trend. Consolidation, price breaks through. Consolidation, look, each one of these candlesticks represents one day. 1 day, 2 days, 3, 4, 5, 6 days. 1 day it breaks through. 2 days, 1 day it breaks through. 2 days, then price breaks through. Look how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Price breaks through on 1 day. However, there are many trading opportunities right within this consolidation as well. But understand that you're in consolidation and trade it like you're in consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Price breaks through. Trends up. Consolidation, breaks through. Consolidation, breaks through. Consolidation, boom, breaks through. Again, each candlestick is a daily candlestick, and it is a generous amount of time that is happening between these moves. A look at the consolidation before 1 day it breaks through. Right? Consolidation, big move. Consolidation, and a move to the downside. Consolidation, a move to the upside. All right. Do you get the picture here? And now we're going to look at some smaller time frames. This is what we see on a daily time frame. Therefore, when you are looking at your chart and at trading opportunities, realize that you're being dealt, that these are the primary reference points in these ranges for the major flows and the major reference points for the senior participants in the market. And I know that these are our reference points when we are moving money and making decisions on entry points in the market as a CTA, and we see this through the news feeds and through the foreign exchange flows. Let's break it down now to a 4-hour chart, and we know there are 6 candlesticks per daily candlestick, and look how we're trading within this range. If you know we're trading within a range, and you want to buy at the base or look to sell at the top of the range. We're trading in a range here. It breaks out. We trade in ranges. Boom! It moves to new price preference point levels. So, for example, here we have 12200 to 12300, and we're trading here between 2250 and 2300 approximately. Then price moves lower to 2230 to 50 roughly, and then price moves lower, consolidates in a range, comes back. Look at this spike, spikes up to the base of this range before moving and committing to lower levels. We move back into the range. Look how price uses this resistance high as its reference point, and then again on support, and we're stuck in the range until price finally decides to move lower. Look, during 1 4-hour period it moves lower, then look how long it consolidates. It commits lower, and then it consolidates within this range. And look how price continues to test the base of this range before moving lower. These are very weak failed attempts of the bulls, which are quickly rejected, very weak attempts of the bulls to move to new levels on the top side, and then they get rejected, and that pushes and it changes the change. There's a flow shift from the bulls to the bears into this level of consolidation down below the previous level of support, which now becomes resistance. Looking at a 4-hour chart again, we see a consolidative range here, and on a side note, this is a real nice reversal level here. You see these highs here, the rounded highs, amazing, beautiful reversal. We commit below and back into the range of the previous price points here. Actually, these can be broken up into ranges as well, but we move into this range. And during one time period, the major flows come in and we shift below the level of support. We move down and look at how price consolidates into these very definable ranges as price continues to step downwards in very distinct and definable ranges. Now, although this is a 4-hour chart, we can clearly see this on smaller time frames, how you'll see micro you'll see micro consolidations, which are also called fractals. They are patterns within patterns, which is simply called a fractal. So we'll see ranges within ranges, and we'll have a closer look at that in a moment. Again, moving down below the level of, look at this. This support here, look at how it provides resistance to the new range, this new consolidation. Something comes into the market as a stimulus and breaks it out. Price comes all the way back up, tests the level of support as resistance, and drifts lower. And again, seeing more reference points. Folks, don't just pass over the details in a chart like this. Study it and use it in your trading, because I will trade on this alone. You would be surprised, you'd be amazed at the simplicity at which I will analyze the market at times and move into some very, very excellent positions. Some important points about trading resistance and support. There's two considerations that you want to acknowledge. When using resistance and support, this is going to provide a foundation for us, and we're going to look for price to converge or to be desynchronized with pivot levels, Fibonacci levels, trend lines, and other key levels of support that you will identify in order to buy or go long or go short, or to manage your positions. The other thing that we want to consider is when we identify key levels of support or resistance, when price starts to penetrate these levels, you may trade it as though you want to see this level hold, but if the level doesn't hold, then we could see a significant move in the opposite direction as well. Again, we have to be careful about looking for technical perfection, but these reference points will be outstanding contributors to our overall analysis of the market. Here's an example. Let's just look here. We see on this 1-hour chart how we see these ranges. Price moves through the ranges. We see more ranges. Price moves through and it again consolidates in these ranges as our primary reference points. This level of resistance becomes support. Slips through briefly to this price reference point. And what I want you to notice is this. As you see here how we have this consolidation, then price uses this base level of support. The flows move through. Nice candlestick formation. And then the flows consolidate at this level of support, which was this previous level of resistance. But you see this here. You see this trend line that moves up here. We see a convergence of the trend line and a key level of support. And then look at this candlestick as price tried to slip through and try to penetrate the level of support and the trend line, and it was quickly rejected. So the shorts did not have what we call follow through, or people did not jump on the bandwagon. And when we see price try to move below but come back and trade and hold above this primary reference point, then we can often anticipate another attempt not only at these highs but at the highs of the previous session. This information is about understanding the market. All right, it is not a holy grail, but it will be a primary contributor to your decisions, regardless of how you trade. Let's break it down further to a 15-minute chart. Look at how We've seen how price consolidates within these ranges on a daily chart, a 4-hour chart, a 1-hour chart. Now look at price flows even closer. We have a 15-minute chart here, very short-term time frame, and we have a nice pattern as price uses this level of resistance as a reference point, and it becomes support before the next leg up. We see it again trading in these ranges, these consolidative ranges. This level of resistance, as price moves through the level of resistance, it now provides a reference point of support at a future date. And again, consolidates and it moves through. What I want you to notice here is the percentage of time that price is consolidating versus the amount of time that it takes for price to commit and move and shift from two dealing reference points here, a high and a low, to two new dealing reference points, the low and the high, and of course the high being the previous low, consolidation low. Again, we see price moving these consolidations and these ranges and dealing reference points as the trend continues. Another 15-minute chart we see here, consolidations, and look at how price moved above the consolidation and has come back down to test previous resistance is now support, and so forth. We see it again here as price continues to trend up in the market. What we're going to use these price points for in the future are, of course, deciding on entries, but also protective stop levels. So you see this high here, for example, once price has moved above, you can almost anticipate that price will come back and test this level. But your protective stop, if you're staying in this position, you may want to hold it below this previous high. Let's break it down to a 5-minute chart to give you even a closer look at what's happening in dealing flows. These are the fractals, so these are the micro dealing ranges within the larger dealing ranges. These are what are called fractals, and foreign exchange flows. So if you think about sitting at an order desk and you have clients who are putting orders in with you, and you're dealing within these ranges, and you see the flows coming in, or the orders of tens of millions or hundreds of millions of dollars coming through your institution, and you are looking for counterparties for your trade. You're dealing with your counterparties using these primary reference points. And here we see it on a 5-minute chart. We see these ranges. Look at this level of resistance that becomes support. Look at how price deals in these ranges. Look how this range high becomes as price moves through, later becomes a level of support. All right, and again, price deals in ranges, deals in more ranges, right? Deals in the consolidative ranges. But look at over the long term. Look at how this low here and this low here establishes a low and a price reference point for this low here, which you will see differently on a 1-hour chart or higher. But look at here how price just consolidates in this area. It moves through, comes back, tests that price point before starting its next leg up. Look at how this high here, price moves through very rapidly, and this high offers a level of support at a future time. And again, look at how this high here is respected by the market as flows attempt to move through that price reference point. These price reference points are in the minds of traders, and they are so deeply ingrained in the minds of traders. When they are trading in that zone, they know the price, and they are dealing with reference to that price in the near term, and then on the longer time frames for the longer term. Again, here we see another 5-minute chart. Price dealing in the ranges, moves to new levels. Dealing in the ranges, moves to new levels. Look at this level of resistance that becomes a consolidative level of support for price dealing in the future. It test support 1, 2 times before moving above and trying to trade and move above, and then this level of resistance confirms and now holds above the level of resistance which becomes support at 1950. It's amazing, folks. And when you understand this, you just wait to see how we use it with order entry and with managing your positions. This will, without question, help you to manage your stops better and manage your profits better and help you to become a consistent trader. Making money trading resistance and support. Support and resistance are one of your most valuable tools, and people don't like them because the tool is seemingly too simple to them. And as we've seen here, it is a simple tool but highly, highly effective tool. I love support and resistance. The market spends the majority of its time bound within a trading range. What this should tell you is that price is not going to move from your entry to your level of your profit level in an instant. Nor will it move from your entry to that home run objective that you have in an instant. It is going to move in ranges and pattern itself within these reference points as it moves up. Clearly identify your key levels of support and resistance in combination with your other tools. Follow up by looking for your other tools to converge with these key levels of support and resistance, as it will offer higher probability for trade entries and trade management. When price passes through a key level of support or resistance, look for the market to return and to test that previous level of support and resistance and potentially to bounce in continuation of the move. And this level may offer a level at which you can make a trade or make a good decision on managing your position. In my position, understanding support and resistance will be critical to your trading, absolutely critical to your trading. And this tool is at least as important as any fancy indicator or gizmo that you're looking for and searching the world over for. You can stop here. Actually, it's healthy to look for other gizmos because it helps you to give it a further understanding and insight into the market. But please do not take your focus off of these market factors.